Hello and welcome to our ACCA P7 Advanced Audit and Assurance lecture recap number 15. This one was on reports to management. So this is under ISA 260 and it's called Communication of Audit Matters with Those Charged with Governance. What is probably what you're thinking at this point? Okay, so the sort of thing that we're talking here are operational issues, i.e. how the audit is conducted, the times and dates that you're going to be there, and the points of contact. Who do you talk to? Who do you contact if you have an issue? Okay, so matters arising from the audit as well, they will be in the management letter, sometimes called a letter of weakness. Okay, so you'll have things like significant findings, like fraud and error, or going concern issues. You'll have accounting issues in there that you'll let management know about if you disagree with policies or disclosures. You'll have any modifications. You don't just put the modification in the audit report, you let management know first of all that you're intending to do that. So to whom do you report? Well, management first of all. The sorts of things that management are in charge of are operational issues. So management are operationally responsible, and the sorts of things that they will be interested in are the logistics of the audit. Okay, those charged with governance, these people really are those in charge of supervision and control and direction of the business. The sorts of things they'll be interested in are set out under ISA 260. These are the things you have to communicate with those charged with governance. The approach and scope of the audit, accounting policies and your assessment of them, risks and exposures, any audit adjustments, material uncertainties, disagreements, and modifications, and also any weaknesses, although that's now under ISA 265, which we'll look at in a second. Things that you have to give notice to both of. First of all, the engagement letter will need to go to both management and those charged with government. Any management letters as well, and any adjustments will need to be informed to both parties, the management and those charged with governance. Also, any modifications that you intend, you'll need to report both to management and to those charged with governance. So how do you actually go about this reporting? Well, letters to management, a letter from the auditor to management. The contents of this will be any control weaknesses, any inefficiencies that you found, procedures that you think should be set out, or any audit issues. Some feelings, some things that are misunderstood sometimes whenever you give these management letters. Sometimes management fail to recognise the impact of the weakness, so you have to be clear in setting that out. On the other hand, sometimes auditors don't quite grasp the cost of implementation of their ideas. At the end of the day, it's the client's business. If they don't want to do something, it's up to them. And also, it may cause them inconvenience to put in some of the things that the auditor requires. The Clarity Project gives us a little bit more guidance on this and actually sets up a new ISA. The new ISA is ISA 265. It's called Communicating Deficiencies in Internal Control to Those Charged with Governance. It used to be under ISA 260 that you reported material weaknesses in internal control, but now under ISA 265 we're going to report significant deficiencies. Okay, so there's a slight difference now, and it's under ISA 265. Some modifications to ISA 260 as well. There's some new requirements. First of all, you have to explain why policies that may be acceptable under the framework are not applicable to the entity. So if there are any policies that may be acceptable under the relevant framework but aren't applicable to the entity, you need to explain why to those charged with governance. You also need to document all oral communications between the auditor and those charged with governance. And lastly, you need to communicate any difficulties encountered on the audit. So that was our lecture on reporting to management.